Hello everyone, so let's go ahead and knock this out right now. Okay, we already have it drawn up here on the board, so now what we're going to do is we're just going to go ahead and we're going to point out how we can increase our cash flow by at least 70%, in some cases 100 and 120%. All right, and also at the same time we're going to be eliminating these loans that our client has. Okay, are you ready? Let's go ahead and do it. So $4,250 is the monthly income, and the monthly expenses are $3,330. Okay, perfect. So now what we want to do is we want to make sure that we're taking copious notes right now. So you may want to write this down, okay, so that you can implement this in your activities, in what you're going to do. All right. The first thing that you do when you're dealing with monthly income and monthly expenses is you do exactly as this client has done, and you write out the monthly income and the monthly expenses. Absolutely. That's the first thing that you do. The next thing you do is make sure you know where these monthly income, right? This monthly income is going to go. Where's it going to go? That's right, into the checking account, right? Checking account. You can't set up right now, you cannot set up a direct deposit directly into a line of credit, so it has to go to your checking account first. All right, so that's the first thing. Next thing, you got to make sure that comes from your checking account into what? Your line of credit. Okay, the available credit limit right now in this scenario is $107,300. All right, so from the checking account, okay, it's going to go into the line of credit. Perfect. Now, what this does is, let me explain to you what this does. What this does is it makes sure that your line of credit is getting noticed by the credit bureaus. Okay, you're having that credit reporting history with them, and it's building up your credit. Okay, so whatever balance is on the available credit limits, you're going to dramatically decrease that balance when you're putting all of your monthly income into your credit line from your checking account. Okay, let's go through it one more time. From the boss, right? Monthly income, you're getting it $4,250. It's going to go where? To the checking account. Okay, then it's going to go where? Into your available credit limit. Now, the scenario is, what if the $107,300 is my credit limit? What if I do not have a balance? Well, you need to pay your expenses so that you can have a balance, right? Or you need to start investing in something so that you can have a balance on your line of credit. Okay, listen. The big thing about this and how you're going to increase your cash flow and eliminate your debts quickly is you must be able to utilize your line of credit. This is numero uno, okay? This is number one on your priority. Make sure that you can utilize your line of credit to place your monthly income into, all right? Okay, enough said on that. Now, when you're paying your expenses, you're no longer going to use your checking account. You're going to use your new checking account called your credit limit. Let me explain. From the credit card, or your line of credit, or your business line of credit, okay, any line of credit, from here, you're going to massively pay off, in this scenario, your auto loan. Absolutely. $13,400 is gone. Also, you're also going to pay off your student loans. So $28,200 is gone. Absolutely, it's gone. So where do these monthly payments go then? The $381 from the auto loan and the $265, now that you've eliminated them, where are these payments going to go? Into your cash flow. The cash flow is determined from your monthly income minus your monthly expenses. Right here, $4,250 minus $3,330 is what? $920. That's the cash flow. However, when you freed up your auto loan monthly payment and your student loan monthly payment, now you have a total of $1,566, okay, in cash flow. Do you see how we increased it by 70%? So what we're wanting to do here is we want to make sure that the money is coming to you instead of one directional to someone else. Okay? So when you're utilizing your lines of credit, remember, the more lines of credit, the better, because you're going to be able to get rid of different loans as they come. Now, why didn't I include the mortgage? Why didn't I include the mortgage in here? Well, because the mortgage falls along the lines of the freedom zone. Do you remember what the freedom zone is? Absolutely. In the cash flow index, okay, in the cash flow index, we talk about something called the cash flow index number, meaning if your cash flow index number is from 0 to 50, that's the danger zone. If your cash flow index number is from 51 to 99, that's the caution zone. If it's 100 and above, that's the freedom zone. You don't have to worry about that because it's not sucking as much cash flow as the auto loan, which is at about 35 cash flow index, and the student loan, which is actually 106. So we could have left the student loan alone, but let's go ahead and free up some cash flow while we can. I mean, we have a massive, right, line of credit. So let's go ahead and get rid of those pesky student loans while we can, right? So with that, I want you to understand how to calculate the cash flow index number, all right? How to calculate that is by taking your loan balance, in this case, $13,400, and divide it by the minimum monthly payment. In this case, it's the $381. And you should arrive at a number between 0 to 50, which means what? It's an ineffective loan, and you have to absolutely pay that off as quickly as possible. Now, usually you'll find that auto loans are going to be ineffective loans, okay? Meaning that they're not really tailored for you, okay? Absolutely. The student loans, you'll most likely find them in the freedom zone, and you'll also find the mortgages in the freedom zone. And you may be saying, well, CJ, I mean, I really want to pay the mortgage down. Well, you can do that, can't you? You can do that. Have you ever heard of the chunking method, where you take a chunk of the line of credit, maybe $12,000, and you place it towards the principal in the mortgage, okay? Thereby defeating that massive interest rate that's going out, because of course the interest rate in all loans feed off of the what? The principal, okay? So that means the bigger the principal, the bigger the interest. And I find that interesting. Get it? Interesting? Folks, this is how you pay off your loans, eliminate your loans in the 21st century. Now, do you see how I did that? Do I need to go through it again? Watch this. $4,250 is your monthly income. It's going into the checking account. Then it will go into the line of credit. And from the line of credit, watch, you're paying everything. From the line of credit, you're going to be paying your loans. You're going to be paying the student loan. You're going to be paying the monthly expenses. From where? The line of credit. Okay? Folks, if you have any questions about how to pay off your loans correctly, okay, just hit me up. Okay, I want you to be a part of our Velocity University, all right, that we have. It's for students, okay? It's for anyone who wants to make sure they see more videos like this explained in detail, right? Walking you step by step on how to pay off the loans, how to increase your credit dramatically, whether it's personal or business, and how to even acquire businesses and get private equity funding if you want to establish a firm, okay, along those lines. We take you from the fundamentals all the way up to advanced. And so this is just a very, very small piece of what we're doing and what we're talking about on the Velocity University. We definitely want you to be a part of that. It's in the description below. Let me know if you have any questions, all right? Hey, thank you so much. God bless, and you have a great night.